Yo, what's up, everyone? I haven't posted any recent YouTube videos for quite some time. To be honest, I had took a big loss in the month of March, so that kind of messed me up mentally. Because it had messed me up mentally, it was difficult for me to post YouTube videos. I had spent a lot of time just coming up with new strategies, what worked and what didn't work for me. Earlier this year, I was mostly trading based on the RSI. That's my number one driver, and my portfolio profit. Keep in mind, this is profit. It's not actually my entire portfolio. It's just a profit I made. So if I buy a stock of $100, sold it for, I don't know, $50 profit, I'm only counting the $50 profit within this chart here. I'm not counting the money that I contribute. TradeZelda, that's what it's for. It's stock journaling for profits and losses, not so much based on your overall portfolio. Now, having said that, I've started pretty well back in mid 2023 and continuing to 2024. That's when I still continue the same strategy. And then somewhere around, I guess, late 2024, that's when I decided to play with vertical spread. And vertical spread actually helped me get some really large amount quickly. Like, see how right here around January 8th, 2025, I've increased my profit to maybe $10,000, $20,000 quickly within 1 month. But then I've also had drops or loss of profits here. So February 5th, my profit actually went down. I took a hit, and then I came back with the vertical spread again. I'm back up at, I don't know, 60K or something like that. Later that week in February, I took a hit. My profit went down from 60 now back to 41K. Later that month, my profit went back to $52,000. And then in March, it took a toe back to about $30,000. And so my profit essentially got wiped out. 50% of it was gone from the peak of February. And at March was my rock bottom, actually. Now, since then, I had reviewed all my trades and see what I've done wrong. The number one thing the biggest mistake was playing with vertical spread. And let me flip over to my PowerPoint presentation to remind everyone what a vertical spread is. Vertical spread key concept allows me to collect premium upfront. It's small account budget friendly. Great setup for low volatility days. High probability of profit, right? But also results in high max loss. And there's a low max profit. So some examples that I've done recently was based on this. So one of the recent trades I had involved me risking $5,000 capital only to gain $120 on the same day using zero DTE options. So zero DTE options makes it more dangerous, but if used correctly, you could also make more money. So that's one of the playbook I eliminated completely. So let's switch back to my TradeZelda journaling. Since March, I had slowly recovered, and then I was able to accelerate a little faster, and that's through multiple plays without using any vertical spread or zero DTE options. And let me show you guys my drawdown. So the drawdown marks the low I had in my P&L. Around March 4th, that's when I had a $30,000 drawdown. I went from 60K profit down to 30K profit quickly due to vertical spread using zero DTE. Over time, I slowly came back from it. So if you notice how drawdown now is reduced every day, little by little, and now I'm actually close to where I was at the peak. So I'm still not happy with what I've done, but hopefully this is a learning lesson for some of you that are using vertical spread. I'm sure you're aware of this, and you probably came across this as well. You will have a lot of days where you had got it right, but all it takes is one bad trade to wipe out your profit, and that can mess you up mentally. In fact, I came across several posts on Reddit where some of these traders, they're going through the same thing. I haven't got a chance to respond back to all of them, but some of them, I would just like to know, like, hey, I also went through the same process, and now I've kind of learned from it and screwed that out from my playbook. So going forward, I will show you guys with a strategy that I've been using for the past 4 or 5 months, essentially to almost double what I had back in March as far as profit. Right now, as of September 12th, I'm sitting at around $58,490 in profit. And if we go over to the right hand side, this is a nice red and green day. So for days where I had like extremely large red days, these were due to credit spread. Since then, I stopped playing credit spread. Notice how I'm more consistent. Yes, the green lines are not as big as the earlier days from this year, but it's still consistent. And in fact, I would rather pick consistency over high profit with high volatility or profit and loss. Let me recap back to the trades I had since January. So January so far was my best month, $11,000 plus, but a lot of it was due to vertical credit spread. And that's where it helped me make a lot of money quickly, but I also lost money. So in February, I lost about $911. I had like 3 days of really big red days for vertical spread, but then I also had a lot of days where I have done well. On February 7th, I had made $3,000 profit. February 10th, over $3,000. February 11th, over $1,000. So there were a couple of days where I have at least $2,000 to $3,000 in profit. And in March is where I took a big hit. So March 3rd was probably the lowest point of my life. It really messed me up mentally. I wasn't happy after work. And, I had a lot of time to really think about, to reconsider the strategy, whether, if I should continue trading vertical spread. It helped me make money maybe the past 2 months, but then I had a few bad days and I ended up wiping out half of my profit. In March, my total loss was about $19,000. I had some green days that were definitely not from credit spread. They're probably from other like RSI driver trading. In April, I actually completely stopped trading vertical spreads. Instead, I went back to my old method, which is basically RSI, buy low, sell high kind of tactics. I made over $800 in profit. May, I made over $900 in profit. And I didn't really trade every day. It just really comes down to opportunities. In fact, I've only traded maybe 19 days. Out of 19 days, some of these days resulted in me just opening positions, not so much closing it. That's what the blue color square represents. In June, I made close to $3,000 in profit. So in June, I traded 17 days. I had 2 days where I opened positions, did not close anything out. I had about 2 losses. July, I made a little bit over $4,000. I mainly traded T triple Qs. And then in August, that's when I kind of start switching up. Not just flipping T triple Qs, but also look for certain stocks pick. Because sometimes stocks, a lot of time, there's a lot of undervalued stocks, and that's a good time for us to capitalize on it. So the month of August, I made $8,470. So this is not the best month, but it's certainly the highest month, excluding my vertical spread strategy. And then here in September, so far, I'm actually surprised. Normally, September historically is a red month in the stock market, and I checked my previous trades before, and September is not really a great month for me. I believe the past week, I probably made the most profit outside of vertical spread and outside of zero DTE options. And let me show you guys some of the examples I have here. So Friday, this is nice. Oh, I've also switched over to a different broker. So now when I click on TradeZelda, it will pinpoint the exact time and date of when I enter and exit out a trade. So let's look at some of these trades here. Let's pick Seezly, SEZL. This is probably one of the tickers that I've been flipping recently. So it says here I made a net ROI of 2.34%. Net profit, $205.82. Let's go ahead and zoom in on this guy. For Seezly, I purchased positions on September 11th. I sold it the next day on September 12th. Right now, it's a bit difficult to see where I traded at. So let's go ahead and zoom in on the 30 minutes candlestick. So around 1 o'clock p.m. is where I purchased Seezly. And I purchased this guy around, I believe, $88 and something cents. I wonder if this journal tells me yet. Here we go. Yeah, so I purchased it around 1:16 p.m. at $88.14, 100 shares. Now, normally for Seezly, when I started, I actually buy in 25 shares per lot. Because I was familiar with the price range, $89 is considered low. I went bigger than my normal lot sizes. I went 100 shares right away. I held the shares overnight, sold it the next day, around 9:46 a.m. at $90.02. So that netted me $206 in gross profit. And a lot of my setups was kind of similar, where I'll buy at the low and I'll sell at the high. Actually, another thing that I want to show you guys is the RSI Let's see if I can add RSI in here. To be honest, Trezella journaling is great, but their chart sucks. Normally, I go to TradingView. This is my bread and butter as far as chart technical analysis. So let's go ahead and look at Seasly. On my bottom here, I have the RSI, and I use the default, which is 14 days RSI. On August 8th, it reached a low of 28 RSI. And, just because it reached 28, that doesn't mean that I'm comfortable going in on it. I waited for the next couple of days and see if I see some sort of support level, right? So there's definitely support. Every time when it reached the 200 EMA, it appears to bounce back up. So to me, it shows that investors or traders are stepping up. Every time when it reached close to $86, the share is being bought up again, right? So that's one of the factors I looked at. Now, not only that, this is important. Their previous earnings makes a big difference. So for Seasly, on August 7th, they had positive earnings. So for Seasly, they had an 18.97% surprise. The actual earnings outperformed their estimated earnings. Their revenue also had a 3.97% surprise. In both cases, earnings and revenue are positive. When it's positive, it shows me that, okay, this is likely a ticker long-term investors will get in on, and that's what I'm looking for. The only way for stock price to go up is we have enough long-term investors willing to hold it. If everyone keeps on selling the shares, the stock price will never go up, right? There must be a bigger demand for buy versus sell in order for stock price to go up. So those are things I look for. I look at the previous earning, positive, both cases. The previous earnings, also positive, with a better big surprises. So this one had an extremely crazy bull run from May 8th up until July 3rd. The other thing I look at is the split. Did it have a regular split or a reversal split? So there's also like reverse split is actually 1 in 6, but a regular split is 6 for 1. What this means is for every 1 share you own, you end up getting 6 shares. So you basically take 6 divided by 1, you use 6 shares. That's what split 6 for 1 means. If it was the opposite, 1 for 6, that's a reverse split. When I see reverse split, that's a sign that companies cannot organically move up their stock price. They have to do reverse split to dilute the price. You end up getting less shares, but the price go higher. That's a reverse split. That's a sign of company being in trouble. They're not able to move up their stock price based on performances. But when I see a regular split, 6 for 1, this is a good sign, right? That means the price was extremely high at one point, and now, they wanted to attract maybe more budget-friendlier investors, traders. Then it's good to have a split, right? And also, I went back as far as the last year and make sure that the earnings and revenue. Earnings always positive. Their revenue has to grow as well. And to me, this is a good sign. I felt like, okay, it was a good sign. RSI shows RSI reached below 30, and I see a strong support. And this is where I flipped this multiple times. I'm still flipping it, by the way. But this is just one example of a stock ticker that I've been flipping. Let me go back to my stock journal, and I'll show you guys some other examples that I've been flipping. So we'll use Friday again. So here's another ticker I flipped, CoreWeave. And this one, I made profit, but I could have probably made more if I held on to the options longer. So for this play, I believe I just flipped the shares quickly just to make a quick $5 profit. It wasn't that much. Yeah, so this one, I noticed it was going up, and I was afraid to get into call options because I already got into call options earlier this week. But I feel like if I get shares, and I only bought 10 shares, which is about $1,100 max. So I bought 10 shares, and, I'm like, well, let me just collect small money for this one. I didn't want to hold on to it too long. So this one, I just made $5 profit. It's not the best use of my capital, but it's still a profit. And then let's see, what else do I have? Okay, I have Apple call options. Here's another one I closed out on Friday. Okay, so it looks like for Apple, I have purchased call options multiple times. September 11th, that is when Apple had their product release. Typically, when Apple have these product events, a lot of times the stock price goes down. And I thought it was investors overreact. That's the main reason why you see multiple red candlesticks going down, because I guess traders, investors, they were not happy with their products. Their latest iPhone didn't wow people, and I thought, people just over exaggerating of the stock price. So then I figured that's a good time, wait for some kind of bounce, and there were bounces. And I've also got into Apple's earlier this week, which is outside of this setup. But this setup for Apple, I purchased two long call options. One was purchased on Thursday, September 11th at 4:45. The expiration date was about 250 days out, so I had plenty of time. So I purchased this guy a little bit before closing at $1,870. And then the next one, I purchased it the next morning at $1,820. So that's about $50 lower than my initial lot. And that's part of my dollar cost average, right? Generally, when the price goes down, I would buy more. But it only works for companies that I believe in that will do well, either do well near term or long term, right? So there's different things when it comes to my method. It's not like I'm randomly just doing dollar cost average on random stocks. I handpick these stocks for certain reasons, right? And in fact, I think Apple, about 20 minutes later, I sold my two Apple options at $19.01. So that's $1,900. I made $31 from the first one, and I made $81 from the second one. So it still gave me a nice $100 and something profit, which was nice. But let me show you guys how it looks like from a daily candlestick standpoint. This will give you guys a clearer picture. So I've only gone on Apple because during this time, if you notice, there was like a long engulfing red candlestick on September 10th. A lot of times, especially for S&P 500 stocks, a lot of times traders and investors going to buy it up, and that's what happened, right? So I actually purchased one, not on Wednesday. I waited for it to drop more. On Thursday is where I actually got in. So Thursday, I purchased one call option for this play, and then bought another one on Friday, seeing that was continuing going up. And then I sold it and making a small profit. Now, I have another play where I actually did flip around Wednesday. So Wednesday, I believe I also built positions up. But that's another setup that I've done. Whether it's Wednesday or Thursday, the reason why I got in is because of this long engulfing candlestick. And the second reason is also this. I'll switch over to my Apple on TradingView. Easier to see. The one day didn't really convince me to get in on it. I started looking at the 4 hours and see, do we have opportunities within the 4 hours RSI? The answer is yes. It's rare for Apple to stay below the 4-hour RSI, below 30. So a lot of times when it reaches below 30, it may hover and, the stock price will consolidate. Over time, it will bounce up. And that's what I kind of started my positions here. So when I see a nice support, this is a good sign to go long. Another thing that I've done, and let me switch back to my PowerPoint here. The strategy that helped me recover my big losses from the vertical spreads that I've done earlier this year. So the strategy I have right now is something like this, and I will probably create a more defined rules and better examples. But this is my swing trading strategy. Be selective on stock picks and ETFs. I use long-term criteria such as earnings and revenue. I also use short-term criteria such as stock beta and RSI. So using financial analysis and technical analysis helps me become a better trader without using zero DTE, without using vertical spread. I'm still trading with shares or options. It really comes down to the ticker. In fact, I might create a separate video on why I pick shares over options, because in some cases it works better with options, and in other cases it works better with shares. The second thing is I always buy based on setups, right? Not based on paychecks. When I started trading, before I wasn't really a serious trader. I would just put some money here and there. But I noticed the only time when I traded was when I have some kind of money that I got from my paycheck. And that's the dumbest thing that I've learned through my life is you definitely don't want to trade just because you have money. You only want to trade when you have these setups. And setups, I start ranking these letter A, B, and C. So normally I will only go for A and B setup. Really rare do I take C setups. So A and B's are my setups that I risk capital, and depending on the ranking, I may risk more or less. The third thing is I always buy multiple lots using dollar cost average. I would never risk my full portfolio in one trade. I do multiple lots. I'll probably do $1,000 or $2,000 a lot. And if I see it dip more, I'll buy more. But you have to be selective on your stock picks or ETFs. Fourth thing is when I sell, it's different from buying in lots. When I sell it, I don't sell it in multiple lots. I like to sell all at once based on limit orders or market values. But typically I use limit orders. So I sell when I see the resistance is reached or is satisfied, with some kind of profit amount. So let me switch back to Apple here, right? Yeah, so Apple, I actually sold it around, I don't think I sold it at the top, but I sold it around this level. I'll use 30 minutes here. So I felt like, okay, Apple, I make enough money and I'll get rid of it on Friday because I wasn't sure if Friday's going to have a volatility day or not. If I held onto it longer, then I would have double the profit I made on Friday. But still, Friday wasn't even the best day for my trading this week. In fact, Friday, I would say, was probably my second to the last of this week. So my worst day for this week was Wednesday. I made $27. Hey, it's still profit. I always tell myself it's better to take small profit than losses. In fact, it's better to not even take the losses from the vertical spread incident I had. So the best day was Tuesday, $1.64,000. Thursday was $1.47,000. Monday was $1.02,000. So this week, most of the days, I would say I actually exceeded what I make in my day job. It's hard for me to exceed what I make in my day job every day. Certain days, it's been happening more frequently now. That's why it's still important for me to continue my day job for insurance and stable income, because you never know, I might get one of those bad trades again. But with this new strategy, it's unlikely I will wipe out half of my account because I really don't risk my full portfolio, or even half of it, on a single trade. A lot of times it's spread out. If I buy options, I make sure they're really far out. Or if I buy shares, I'm just doing lots. If it goes down more, I will buy more. And I'm being really selective too. So by having this concept, this principle in play, it helps me become a more consistent, profitable trader. So comment below if you have any questions or any examples you want me to bring up next time. That's all I have for today. Thanks for your time. Talk to you guys next time. Peace.